Well, let me begin by saying congratulations for your governing body coming into the year 2020. There's a laundry list of professionals who can incorporate. There hasn't been any problems. Doctors, dentists, vets, massage therapists. Why not realtors? So congratulations. Welcome to the world of balancing tax benefits with compliance costs. And that's a conversation you're going to have with your accountant. Do I make enough money that it's worth paying the extra accounting fees and the extra legal fees every year to put my money into a personal real estate corporation? And there's a number of reasons why the answer might be yes. Number one, income splitting becomes marginally easier. You no longer have to, and forgive me, pretend that your children are delivering flyers for you in order to cut them a paycheck, and then have to worry about employment deductions. You can now just issue them shares and issue them discretionary dividends. So congratulations, here's your dividend check. Go put it in your college fund. That's number one, income splitting amongst immediate family members. Number two, corporations are a fantastic vehicle for deferring income chronologically forward in time. So let's say your net commissions was $200,000 that would normally be issued to you as a paycheck from Century 21. Well, now it's going to go into your personal real estate corporation as corporate income. Corporate income is taxed at a reduced rate compared to individuals. Now, they call it the integration rate, whereby when you take the money out of your personal corporation, so Wesley Jackson Professional Corporation cuts Wesley Jackson a paycheck, that rate of tax plus the corporate rate of tax will be equal to had I taken it as employment income. Okay? But let's say on that $200,000, I only take $100,000 of income this year, and I wait a year to take the other $100,000 of income. Well, now, not only do I pay the reduced rate of income on that $100,000 that I haven't taken out, but then I defer my personal income tax until next year. So even if I take that paycheck on January 1st, I'm now not paying the personal income tax on that until January 1st, 2022, which I file in March. So I'm kicking 18 months of income taxes down the road. Now you have to plan for that. You have to reserve for it. But guess what you get to do in those 18 months? You get to put that money to economic productive use. Even if you bought a GIC for the equivalent amount of your tax liability, you will be ahead of the game. Okay? So the time deferral of income is very, very valuable. Now, you multiply that over 10, 15 years, and by the time you retire, now you have basically a self-guided retirement income stream because you've deferred enough income that you can take that income out. And now your accountant is going to put a lot of meat on those bones. That is just a skeletal overview, but that's the idea of it. Now, your compliance costs is another story. Right now, you might be able to stop by H&R Block and get your income taxes done for $50. An accountant is going to charge you much more than that to do your corporate tax return and your personal tax return. Your lawyer is going to do annual filings with the provincial government called your annual information return. It's going to cost you a little bit of money. So if you're only saving $200 in taxes, it's probably not worth your time to pay to incorporate and pay the annual compliance costs. But, and the number I've heard thrown around, I don't know if it's accurate, is $200,000. If you're making $200,000 a year as your top line, probably going to be worth it. If, and I don't say this in any kind of judgmental way, let's say this year you're not planning on being a high volume agent. Maybe you wait a year. Maybe you're on paternity leave for 6 months this year, and coming back it's not going to be a stellar year. Put it off a year. Take those costs, kick those costs down the road. But yeah, if you're doing big business, there's going to be lots of opportunities to split the income with immediate family members, and again, defer those taxes. I don't give tax advice. I'm not licensed. I'm not competent to give tax advice. I can tell you about the process. So one of the things you'll see on the internet is off-the-shelf corporations. You can go online, probably register your own corporation, and it's going to say, yeah, unlimited number of common shares. Okay, you're incorporated. Fantastic. Well, one of the pitfalls is, if I were to give my wife the same class of shares that I hold, when I declare a dividend to me, because she has the same shares that I have, she gets the same dividend that I have. Now, she's a teacher. I can't just dividend her my income. The tax implications would kill us both. So you have to set up your corporation in an intelligent way, not only complying with the regulations, but in a way that will let you say, okay, I have a class of shares that are just for a spouse, husband or wife, as the case may be. I'm going to declare a discretionary dividend for my spouse on their class of shares, the spousal shares. I'm going to have a different class of shares for children that I may want to split income with. And again, it has to be a different class of shares that I hold and a different class that my spouse holds. Otherwise, they're all going to be deemed to receive the same amount of income. And so what you can pay them, you're going to talk very closely with your accountant about, but the process I do understand and can explain. As the accountants and the lawyers should work together to come up with that adequate share structure to meet with the client's long-term financial needs. And so introducing the lawyer to the accountant is a great first step. In terms of the incorporation process, it's an overnight process. Step one, you have to get clearance from the provincial government or the federal government, as the case may be, for your name. So Wesley Jackson Professional Corporation is taken. You couldn't be Wesley Jackson Professional Corporation as well. So Trevor Evans Personal Real Estate Corporation, I have to file what's called a nuance name reservation. That's going to come back overnight. Once you have that name reserved, you can then register that corporation. Again, your lawyer and your accountant are going to come up with what the share classes look like. We're going to make sure that the other aspects of your corporation comply with the regulations. You're going to get something called a certificate of incorporation. Now, I have my corporate minute book here because I like visual aids. So this is what it's all about. Oh, sorry, virtual background. You're going to get a certificate of incorporation. You're going to get a set of issued articles of incorporation. From there, you're incorporated. And now, the other mistake that the do-it-yourselfers make is just being incorporated is not going to survive an audit. Your corporation also has to be organized. And what does organized mean? Well, you have to issue shares. You have to appoint a board of directors. You have to appoint officers of the corporation. If you don't do those things, CRA is going to take one look at your fancy piece of paper and say, congratulations, you own paper, but you're not properly incorporated. We're reversing all of your income tax elections, attributing this income to you personally, undoing all your hard work and all the money you spent. So properly organizing your corporation is important. And the other rookie mistake that do-it-yourselfers make, when you issue yourself shares, you actually have to pay for them. You can't just write on a piece of paper that I own one share of Wesley Jackson Professional Corporation. If I bought it for $1, I have to take $1 to the bank and put it into the corporate bank account to evidence that I, in fact, bought that share. And if you don't, welcome to an audit. It's been my pleasure, and good luck with everything. And thank you for the work that you do.